Hello there. Today in Chapter 3 of our Fire and Special Perils Insurance webinar, we discuss underwriting considerations and extensive clauses. Welcome. First, underwriting considerations. Underwriting fire and special perils insurance involves assessing the risks associated with insuring properties against fire and various perils. Insurance companies carefully evaluate several factors to determine the premium rates and the overall insurability of a property. Here are the key factors considered during the underwriting process. 1. Property type and construction. The type of property and its construction materials are crucial factors. Different property types, such as residential homes, commercial buildings, industrial facilities, or special-purpose structures, have varying risk profiles. The construction materials used, such as wood, brick, concrete, or steel, can also impact the property's susceptibility to fire and other perils. 2. Occupancy and use. The purpose of the property and its occupancy play a significant role in underwriting. Residential properties have different risks compared to commercial or industrial establishments. The nature of the business or activities conducted on the premises can affect the level of risk exposure. 3. Location. The geographical location of the property is crucial. Properties situated in areas prone to natural disasters like earthquakes, floods, or wildfires are subject to higher risks. Urban areas might face higher burglary or riot-related risks, while properties in remote locations could have limited access to firefighting services. 4. Fire protection measures. Underwriters assess the fire protection measures in place, such as the presence and functionality of smoke detectors, fire alarms, sprinkler systems, fire extinguishers, and fire-resistant materials. Adequate fire protection can significantly reduce the risk of fire-related damages. 5. Claims history. The property's past claims history is considered to determine if there have been previous fire or peril-related incidents. Properties with a history of frequent claims might be viewed as higher risks and could impact the premium rates. 6. Building valuation. The valuation of the property, including the replacement cost, helps determine the appropriate coverage limits and the corresponding premium rates. 7. Security measures. The level of security measures employed, such as security guards, surveillance systems, and burglar alarms, can influence the risk of theft-related perils. 8. Age of the property. Older properties may have outdated electrical wiring, which could pose a higher risk of fire incidents. Newer properties might have modern safety features that reduce risks. 9. Proximity to fire stations. The proximity of the property to the nearest fire station and emergency services is considered. Properties located far from fire stations might face longer response times in case of a fire emergency. 10. Building maintenance. The overall condition and maintenance of the property are assessed. Properly maintained properties are less prone to perils and are seen as lower risks. By evaluating these factors and considering their collective impact, underwriters can determine the appropriate coverage and premium rates for fire and special perils insurance. This ensures that property owners receive adequate protection tailored to their specific risk profiles. Secondly, let us briefly look at some of the fire and special perils extensive clauses, their definitions and applications. Fire and special perils insurance policies often include various extensive clauses that provide additional coverage and benefits beyond the standard coverage. These clauses are designed to offer more comprehensive protection to the insured property and policyholders. Here are some common extensive clauses, along with their definitions and applications. 1. Declaration of Value, DOV. Definition. The declaration of value is an endorsement that allows the insured to declare the total value of the property, including building structures, contents, machinery, and equipment. Application. By declaring the accurate value of the insured property, the policyholder ensures adequate coverage, minimizing the risk of underinsurance. In the event of a claim, the declared value is the maximum amount the insurance company will pay for the loss. 2. Escalation clause. Definition. The escalation clause is an endorsement that automatically adjusts the sum insured over time, accounting for inflation or changes in property values. Application. This clause helps maintain adequate coverage as property values increase due to inflation or market trends. It ensures that the policy remains up to date and provides sufficient coverage to account for the rise in property replacement or repair costs. 3. Removal of debris. Definition. The removal of debris clause covers the expenses incurred for removing debris after a fire or peril-related incident, including demolition, cleanup, and disposal. Application. After a covered loss, debris removal can be a significant expense. This clause ensures that the policyholder is reimbursed for the cost of clearing the property, making it ready for repairs or reconstruction. 4. Architects, surveyors, and consulting engineer fees. Definition. This clause covers the fees of architects, surveyors, and consulting engineers required for assessing and estimating the extent of damage and the cost of repairs or reconstruction. Application. After a covered loss, engaging professionals to evaluate the damage and create plans for rebuilding is essential. This clause ensures that the policy covers these professional fees, facilitating a smooth and efficient recovery process. 5. Impact damage. Definition. The impact damage clause covers damages to the insured property caused by the impact of external objects, such as vehicles or falling trees. Application. In situations where external objects collide with the insured property, causing damage, this clause provides coverage for the repair or replacement costs, offering financial protection against unforeseen events. 6. Temporary removal of property. Definition. This clause provides coverage for property temporarily removed from the insured premises to another location for repair, renovation, or safekeeping. Application. When property needs to be moved off-site for various reasons, such as repairs or renovations, this clause ensures that it remains covered under the policy while in transit and at the temporary location. 7. Rent and leasehold interest. Definition. The rent and leasehold interest clause provides coverage for the loss of rental income or leasehold interest due to a covered peril that renders the property unfit for occupancy. Application. For property owners who rent or lease their premises to tenants, this clause protects against financial losses resulting from the unavailability of the property for rental due to damage caused by covered perils. These extensive clauses enhance the coverage and benefits of fire and special perils insurance policies, providing more comprehensive protection to property owners and ensuring financial security in the face of unexpected events. It is essential for policyholders to review their policy documents to understand the specific clauses included in their coverage and the extent of protection offered. This marks the end of Chapter 3. We will be back shortly.